Hey everyone, this is Steve Kick, Mortgage Loan Officer with LMCU, proud member of the MMLA and your host of the MMLA Connect Podcast. Today I have an esteemed guest, Tim Pascarella of Ross Mortgage. Hi Tim, how are you?
I'm awesome. Esteem's a strong word, but thank you.
I'm excited to have you on today. It's been, it's been in the making here, and I'm excited to hear your story and share that with our listeners and learn a little bit more about you, Tim. So let's start out with your career. You've spent a long time at Ross Mortgage, but tell us your title and tell us how you got there and how long you've been there, and give us your story at Ross Mortgage.
Yeah, sure. No problem. So I've been here since 2001. So going on 24 years next year. And I mean,
Awesome.
Honestly, it's the old American dream. You know, I climbed the corporate ladder. I was hired in as a loan officer assistant from someone who to this day is still one of our top producers. I went from there to being a loan officer. I was a top producer in the company for about 7 to 10 years. Ran a $250,000 branch for about 4 or 5 years, and then I became the president of the company in 2017. So today, I'm proud to say that I'm still here. I'm the president of the company, and we made it through, 3 of the pretty bad years. 3 of the worst 3. Let's put it this way: as for it being consecutive years, it was pretty intense, and we're proud to say we're here and we're thriving, and we can't wait for next year.
Awesome. I mean, I think we're all excited to look forward to what's coming next year and kind of get the past few years behind us. So, to be at a company for 23 years, you must be doing something right. But, your company also must be doing something right. Tim, tell us why you've chose to stay there for so long and what's made it so great for you to stay at Ross Mortgage and what you're so proud of being there.
Well, I start off by saying, I just so everyone knows, I started when I was 12. So I'm not that old. I'm not that old. No.
Looking great, man.
Yeah. No, I think that it's a great question. The culture starting with Hugh Ross, Tim Ross's dad, Tim Ross, our CEO. I think the culture has always been that they take care of their own. I mean, I'd be lying to say that I haven't gone on a recruiting trip or two in my 23 years, right? I mean, obviously you entertain the ideas, but I honestly, every time I went on one, I don't know, maybe it was for a free lunch, but it was just never one of those things where I really thought I would make the decision. I mean, Tim and Hugh built a culture that I'm proud to take on into the future, that we take care of our own, I mean, when you're here, you're like family. We run a business, to be sure, which isn't always fun, especially the last 3 years. But we take care of people and we do the right thing. I think the most important thing is we don't only do things right; we do the right thing, and that's kept me here. I've never felt like I couldn't go into the CEO's office and tell him my issue. He would listen to me and he would try his hardest to fix it, not only for me, but he always remembered that there was a consumer on the other side of the issue.
That's awesome. I think what I take from that is that leadership is just so important, right? And when you have the right people in place, that top-down leadership is effective, and it keeps people at that company, and also they promote within, right? I mean, look where you started and where you are now, and you're still the president after making it through the last few years. So hats off to you. Hopefully, you haven't established any habits that you don't want to keep in 2025 because of this industry, but really excited for to see a smile on your face and know that we're moving in the right direction, and I think the MMLA definitely has a part to play in that, right? It's been a great thing for my career to meet people like you, but I think also it helps us bring ideas back to our company and do things. So Tim, in your own words, tell me about your experience with the MMLA and why you're so involved.
Yeah, for sure. Right now I'm a treasurer of the MMLA, the Michigan Mortgage Lenders Association, that anyone listening to this probably knows what the acronym stands for. For me, the MMLA was, as a loan officer and a branch manager, it was my first taste of what it was like to run a business. Meeting business owners, presidents, CEOs, executives, I think it gave me the itch. I always kind of felt like, I had something more to give than just being a top originator. But the MMLA gave me something where I could really dive in and see what it was like to own a company and all that kind of stuff, and rub shoulders with the people who do. We're in a really unique and cool industry when it comes to being a small IMB. I mean, you get to make massive big business decisions that usually is only saved for the real big players. But in the mortgage industry, we always say we deal with large numbers,
Yeah.
and so you get to kind of gear your company and steer your company in the way you want. And the MMLA was my first taste of that, where I got to meet other owners and see how they do it and take ideas. My favorite part about the MMLA, regardless of the event I'm in, is the collaboration. That's my favorite part of it.
Definitely.
Mm-hmm.
And I think it's cool to hear that from a perspective. We talked about this a little before I started recording that, I've been at my company for 15 years,
Mm-hmm.
going strong, 12 of that in the mortgage industry. But it's one of those things where I just think when you find a good place, you just hold on to it, right? And
Yep.
a good thing when you got it. And that's the same with the MMLA, right? When I started getting involved with the MMLA, it really opened my eyes to all the different things that I didn't know about in our industry and
Mm-hmm.
all the different people and companies. And you're at an IMB, through the Future Leaders program, I've learned more of like how that functions compared to me, us being a credit union,
Mm-hmm. Mm-hmm.
and then banks. And it's really important that IMBs, have a voice. And the MMLA seems to be, from what you say, a great avenue for that. Am I picking that up correctly?
Absolutely, it really does. And then, not to mention all the things you can do for your industry with the MMLA is also super, super exciting and super cool too. It's funny, you talk about you've been there for 15 years. I've been here for 23, 4, whatever it is. I lost track. Uh, what people admire about my tenure here at Ross, and they congratulate me and all that thing, is also my most hated, biggest pet peeve of this industry, is that the movement in this industry blows my mind. I was told by my grandfather who raised me is that the grass is always greenest where you water it, and people jump way too much in this industry thinking there's something better on the other side.
Yeah.
Whereas we have opportunities to stay in this company, grow with this company, and actually make change within the company. And I just think that, it's super important that, I say this with tongue in cheek because I also recruit a lot, but I like to say that when people join here, it's the first day of the rest of their career, because, we're going to build something that's going to last. And we pride ourselves on retention and not having people leave. So it's something that this industry, I think a lot of bigger banks than me could learn a lot from companies like Lake Michigan and Ross Mortgage, and the way they retain their loan officers. They obviously are doing something right.
Yeah, for sure. I think whenever you have ever been in those, positions where you've felt overwhelmed or something like that, and you think about, maybe it makes sense to go somewhere else. And whenever I've had those thoughts, they've been pretty fleeting, but you sit down and you look at everything that you have, and then you look at what you're trading for that, and it's never been worth it, and maybe that's just because I love the company I work for so much, and I feel like I can do so much for homeowners. I'm sure you feel the same way, that it's
Absolutely.
like, I don't want to take that chance somewhere else. I know what I have here, and I'm going to build that and continue to grow it. And maybe it's the crazy in us too, that we continue to water it at that at the same company and whatnot. But it feels pretty good to be loyal to a company that you feel is doing things the right way,
Yeah,
and
100%.
does
Take care
right
of
for
those
its
who take care of
customers.
you.
You know,
Absolutely. Absolutely.
yeah. So, but being at an independent mortgage bank and being at a credit union is two different worlds, right?
Yeah.
So, Tim, honestly, the origination's been rough, numbers wise for everyone, right? But hit even harder are the smaller independent mortgage banks in these times, right? So tell us about maybe some of the struggles you've gone through the last couple of years and how you made it through.
Yeah, I think you can't answer that. You can't answer how you made it through the struggles without answering how you made it through the great times. Tim Ross, myself, his sister Betsy, we have a strategy, and that strategy resonates through everyone here, right? I mean, if the market can be here and the market can be here, we're never not going to live here, and I think that's the strategy that we put in place in 2020 and 2021. We knew it wasn't going to last forever. We tried our hardest to grow, and we did. We had monster years like everybody else in the industry those 2 years. But what we didn't do is, you weren't going to find us with a boat on St. Clair. You weren't going to find us with 3 new cars. You weren't going to have their W-2 be the largest ever or anything like that, because, we kept it in the treasure chest. And, point blank, making business decisions and all the things we had to do in the last 3 years to survive would have been all irrelevant if we didn't have the capital. And so I think that making tough decisions, look, man, I don't have to spell it out to you what we had to do over the last 3 years. It is awful. It is my most hated part about being in this job is watching good talent have to leave. Not, leave, but you have to, tell them they have to leave. And when you're small like us, it's even worse because we're all so family and we're so close together. So it has been the worst part about the last 3 years is the decisions you had to make it were hard. And I don't envy any owner or any executive who had to make those decisions because they didn't do anything wrong. So that was the worst part, to be sure. But the nice part was we're sitting here in December of 2024 and we're still fine. And there were tons of companies our size that didn't make it. 67% is what I'm being told.
How much?
67% either merged, got acquired, or flipped.
Didn't renew their license.
Yeah. So I mean, it's just one of those things where it makes us even more proud of where we are and where we plan on going. And I mean, hey, listen, attrition is although it's horrible, when this thing does turn around, I'd rather be in a market with 1/5 the people that were in it 4 years ago and have a great market than be in it 4 years ago when there was more people in this business than ever before. So I think the ones who survive will thrive. Now the question is what will happen next year or the year after.
It's like the whole pie has gotten smaller, but our portion of the pie is getting bigger. So, there's definitely something to be positive about, looking into the future here for sure. And, I think about recruiting wise, not even just mortgage related, but there's probably a lot of, loan officers and people from this business that are out of work right now that are really great employees, that work really hard, just, weren't at the right place and weren't getting enough at bats or whatever. So, I mean, there's probably a lot of really good talent out there that's just sitting there ready to be picked. So hopefully if you're a recruiter, your eyes are open.
Yeah, I would venture to guess there's more talent without jobs in the mortgage industry than ever before.
Yeah,
I mean, it's just
someone posted some statistics about Michigan about how many loan officers, like it was like something like 95,000 is only expected to renew this year, and it was like
that was worldwide. I think that was country. That was
maybe that was I just looked at the numbers and it was over like 650,000 like 4 years ago or something like that. It was pretty amazing to see the drop off.
It's crazy. Yeah. But that's exactly what I'm talking about. For those that stay, this thing turns around.
Right.
It might be better than 2020 and 2021. You never know. You never know. Sometimes you're just successful by being there.
Perseverance,
Absolutely.
You just gotta keep plugging away sometimes, and that was definitely like a mantra that I've carried over the last couple of years. It's like, it's always come back around, 12 years for me, and like the cycles I've seen it, but never was it down for as long as it was, right?
Yeah.
You know, for the last couple years, right? It just didn't really bounce back like we expected it to. So,
no, I mean, everyone's like, "Oh, what are you worried about?" You know, you did 2008, 2000. We tripled our business in 2008. 2008 was fine. I mean, the biggest thing about 2008 is if you were a government lender, which we are, FHA, VA, USDA, you killed it.
Yeah.
It was the only loans you could do, you know? I mean, so 2008, I mean, I felt bad being around friends and family in 2008 who I knew were struggling and that kind of stuff. And they're asking me how I'm doing. And I'm like, okay. Like I didn't want to admit.
Yeah.
This time is so weird because now we're at the opposite end of that spectrum, right? The economy's booming, the stock market's up, CPI, all the things that everyone says is so great. People ask me how I'm doing. I'm like, okay. You know, so my answer is still the same. It's just they mean different.
Yeah. You're in a different position than you were before, you know?
Yeah. For sure.
You know, and tell us about like, are you still originating loans? Because I think I saw on your LinkedIn, you know, so that's an interesting thing. You know, you're the president of a company, but you're also originating loans. So that's a very, you know, two distinct roles that not very many people can wear those hats, you know. So tell us about that.
I mean, I knew when I took the position that I would always want to originate because I always want to know what all my salespeople are going through anyways. I will tell you, I don't get special treatment. I wish I did, but I don't. You know, I have a loan partner who's second to none, who was with me before I switched. So there was no doubt in my mind that she was going to be fine. But yeah, I mean, I'm a salesman at heart. Like I can't not originate. If someone calls me and says, "Hey, you did a mortgage for me back in 2014. My son's thinking about buying a house." What am I supposed to say? No.
Yeah.
You know, I mean, absolutely. I'll talk to him. I mean, I'll put him in a program. I'll put him in a plan. I'll hand it off. And yes, I do have someone who does, you know, the majority of the work when it comes to once we get it. But yeah, I'll always originate loans. I mean, that's just, my phone's going to ring with something. I've done over 2,000 loans in my career. Someone's going to call me.
Yeah.
You know, I hope.
Yeah.
I'd be more mad if I didn't. So then
a lot of people would hand those off, right? You know, and it's pretty cool that you can, you know, still take that phone call, go through it, walk them through things and take the application and get it moving forward, you know?
Yeah. Well, I've always said origination's forever. You know, I mean, I made a promise to all those people that I'd be their lender for life. And my position shouldn't stop that. Now, I don't go and try to get more. I haven't tried to get more in years, you know, like I don't go visit real estate offices. I don't try to do anything like that. But I mean, I was raised by the right people, you know, and they told me that, you know, your word's everything, you know, and if I told these people I was their lender for life, that means I'm their lender, no one else. So those are the only deals I take. Those are the only deals I take.
You're a true mortgage loan originator, Tim, you know? Like it runs in your blood.
I've had years.
Yeah. So if you're looking for someone you want to work for and, you know, the timing's not right or, you know, where you're at, Tim, obviously it seems like you'd be a great person and it'd be a great company to work for you. So anybody who's out there looking, give Tim a call. I'm sure he'd love to have a conversation with you.
That is
fact. Tim, hey, were you going to say something?
No, I said that is fact.
Yeah, for sure. I know you are. You know, you've always been, since we finally connected, you've been a great, you know, friend or whatever, just to reach out and check in on me, you know, which I appreciate. And so I know that you'd be a great person to work for.
Appreciate that.
Tell us about the real Tim Pascarella. We want to know what is your why, Tim? Like, what brings you joy? Why do you get up and do what you do? And a little bit about what you do when you're not originating loans or running a company.
Oh man, I was not prepared for that, but I can't grab it. Maybe I can. Yeah. Okay. That's my why.
All right.
Right. And there is no anyone who knows me knows that is not cliche. That is not bull beep bleep. That's my why. I have told many people this, and I always say, I dare me. if I was by myself, I'd be a fishing guide in the island somewhere. I love to fish. I love meeting new people. What better way to do it than be a fishing guide? But, I wasn't raised the best. What I mean by that is I was lucky enough through a different obstacle to get there, to have grandparents take me in 8th grade. And then I feel like from 8th grade on, I was raised as good as you can be raised. But in the beginning, I was not. So when I started having children with my wife, that it was my every kid I had, my income went up 25, 30% because we're blessed enough to be in 100% commission, and we get into it what we put into it, or we get out of it what we put into it. That's my why. What I do when I'm not working, I golf. I golf a lot. I golf as much as I possibly can. I love golf. In the wintertime when I can't golf, I'm the first one who will complain about snow. I'm the first one who will complain about my joints hurting because it's cold. I'm also the first one with a smile from ear to ear when I got a snowboard strapped to my feet. So, I like to golf. I like to snowboard. I think I kind of got forced into those things because in Michigan, you got to take advantage of what weather you got. But those are my two favorite things to do when I'm not working. But my why all day long is my family. There's no other reason.
I think I counted right, but I don't know. I'm a mortgage loan officer, so that's 4 children there.
Yeah.
They have, right?
Yep. Yeah.
And
I have a sophomore in Michigan State. I have a senior in high school who's contemplating where he wants to go. He's got he's way more blessed than I was. He got a lot of options to choose from, so he's got to figure out where he wants to go. And then I've got a 8th grader and a 4th grader.
Awesome.
Girl, boy, girl, girl.
Decent range there too. So, you still got some time as having them under your roof.
Yeah, I always said after the first 2, it took my wife 5 years to convince me of another one. So every 5 years, she broke me down. So
nice. Mm-hmm. Well, it worked, and it seems like you enjoy it. So coming from another father, I can appreciate you wanting to give them something that you didn't have when you were younger.
Absolutely. It's couldn't be more honest that if it was just me, I love mortgages and I love helping people get into homes, but I like the island and I like fishing too.
Yeah, for sure. I do a little bit of grounding, which is walking around barefoot, and I haven't done it in a while. And so I chose to do it today because there was no snow on the ground and I had to run back up to my lawn. I took my garbage out. I have a pretty big yard. So I walked it down to the front and my feet were like frozen by the time I got there. So I was running back,
So have you seen the Hollis guy from the Buffalo Bills?
Yeah.
He bare feet until he has to strap on his cleats. He walks
really?
to the stadium with bare feet. He leaves the stadium with bare feet. Grounding or something like that is what it's called. And dude, this guy lives it, man. He lives it.
Yeah, it's hard to do. It's hard to do it in Michigan when it gets cold.
He's in Buffalo.
That's right. That's why I think a warm weather retreat is in my future. Definitely.
Absolutely.
But yeah. So before we wrap up here, Tim, I usually ask everyone, give us your most positive spin of 2025 or something great that you have that you're looking forward to that you can leave all the listeners with.
That's a tough question. I don't know what's going to make rates be driven down. I don't. And anyone who's listening to this understands that we live in an industry that usually something bad happens in the country for rates to go down and for us to be busy. I mean, if you look at all the times rates have gone down in the last 20 years, you had 9/11, you had the Great Recession, you had COVID. Those are years that you can vividly remember rates just plummeting down, and we were busy and we became very busy. I hope to God the government, after however many years it is, figures out a way to not have that happen. I think that in 2025, my estimated guess is that rates will go down a point, no more, from where they are today. So if the average rate is 6.875, I think 5.875. My hope, and that's hope's not a strategy, but my hope is that the new administration will do something, and I don't know what it is, but do something to make houses affordable for the middle class. I think that until that happens, I mean, the middle class has been the backbone of America for as long as you can remember. And I am hoping that that the main focus of the administration for the first year is the middle class. And I think getting homes affordable again. And that doesn't mean we have a bunch of depreciating homes. There's got to be some way, somehow, to build homes that are affordable, and builders have a incentive to do them. I think that if you told a builder, hey, you could build a $275,000 house and make money doing it, I think they do it. But they can't justify it. And I think that if we can figure that out, you're going to see a lot of expansion. I think the coolest thing about this is that when that type of stuff happens, aka 2001 it happened, in the state of Michigan, look what happened to Clarkston, Goodrich, Davisburg, all these cities that today, hell, Goodrich just won the state title in football. 20 years ago, you didn't hear about Goodrich. You couldn't even tell me where it was. And now they just won a state title. And it's because, when all of a sudden you make houses affordable and the metropolitan areas are already, there is no more land to be built, it expands and it brings you into places that can be, super cool and super expansive.
I love that you brought that up, because that is actually one thing that I'm super passionate about. I've been having the same conversation with people about, I think there needs to be some way that the government can subsidize these developments to make it affordable and profitable enough for builders to want to build these smaller houses. And hopefully we have enough builders who say, yeah, we understand that the average homeowner can't buy it, first-time home buyer can't afford a $550,000 new build, because that's where they're starting, you know? Yeah, so absolutely. We've got to be able to do something. And I think we have to act sooner rather than later. Right.
Absolutely. So, I 100%, man, give them tax breaks. You build a house you sell a house for less than this. Don't tax the profitability. Find 100 different other ways to tax profitability. Don't tax that. There's got to be a way where you can incentivize these guys. And just for the record, if you do, they will build it, because who wouldn't want lesser risk? A lesser house is lesser risk.
Yeah.
So it's not like they won't do it. You just got to have them make, they're self-employed people. They got to be able to make money doing it, So I look forward to something like that. I hope it's out there. And I want to be around to see it. So.
Well, I'm going to connect with you more on this afterwards. I'm excited to hear that. I'm passionate about the same thing. So hopefully we can use the MMLA and the powers we have to,
let's form Lansing.
Yeah, for sure. I'm all about it.
Absolutely.
Well, hey, Tim, I'm going to wrap it up here. I appreciate your time today. If anybody's, looking for someone to have a great conversation with, Tim, you're the man. My name is Steve Kick. I'm the host of the MMLA Connect Podcast. Thank you for listening. Thanks again, Tim. Have a great one.
Thanks for having me.
Yeah, anytime.